out in Europe, 200 million miles. Can the autonomous vehicle, if the goal of it is to reduce traffic crashes, do better than one fatality every 100 or 200 million miles? It would have to do that. So a big obstacle is the public. The public is also reacting in San Francisco and some other places and not liking to see autonomous vehicles on their streets. There's the environmental issue, the ecological issue, and others that are being raised, and some of them are taking to guerrilla warfare, putting obstacles in the way of autonomous vehicles, putting traffic cones on them. They're yet to be perfected, but there is what I believe to be a big market there, particularly with autonomous transit, and I think that's a sleeping giant, and we may see more of that coming up.
Hey, Dan, so sticking with safety here, do you think sort of Tesla, with some of its public perception, some of its issues with accidents?
We don't have time, so let's take a look at some technicals. What's good, everyone? How are you guys doing? Welcome to episode 5 of our November Masterclass. This is episode 5. All right, I hope you guys watched the episode 1 to 4, and then welcome to episode 5 of our November Masterclass, and then let's take a look at our chart. Today I'm going to share with you guys how I analyze like from the first step to where I'm getting my entry and exit of the market. All right, so let's go. I think we're going to use AUDCHF to do this. As you can see, like this is monthly time frame, and then you can see the overall downtrend, like the overall market price action is downtrend, is moving down, and then we can see the current month is bullish, like because of the market hit some bullish levels, so we might expect the market maybe to push all the way to the or continue falling. So we don't know. Anyway, we can scale down to look at it so that we can know where is the market going next. All right, welcome to episode 5 of our November Masterclass. Don't forget to subscribe for more videos, like and comment if you have any question. If you want me to show you something, how I plot my major or minor level, how I draw my trend line, like whatever in the market, what confirmation I use before placing the trade, ask me in the comment box. I'm going to respond to you guys, or I will do a video to you guys, or maybe I will respond it to you in the comment section. All right, so welcome to the November Masterclass episode 5. All right, this is another region I can, but all right. So now we say we are going to plot our major level because this is weekly time frame. Weekly time frame, we look at monthly time frame, we see the overall market price action is downtrend and the current one is bullish. And as you can see also in weekly too, the overall is downtrend, and then we can see some bullish candlestick around here. So before, let's take to look at where we can plot our major levels. All right, major levels. This is the rectangle we use always. Remember this. We use rectangle for plotting our major levels. All right, so this is what we use. This is what we use to plot our major level. All right, so let me clone this take it the up side. All right. All right. Nice one. I can run it again. Plan. We look at where I'm plotting my major level. If you want to know how I do this, go to the previous videos and check. I break down everything in details to you guys for free. All right. So I always tell you guys I'm 99% technical, fundamental, not much, just a little bit. I believe in technicals in this market for real. You know, technical lead the direction. Like if we can look at this weekly chart, like overall, we can see the market come and break to the downside, come back for retracement, try to retest the level, major level, and break lower, break the first breakout, which is the fake out around here. So you take a sell all the way to the next major level, you will have been in profit. And then when you hit this major level, so the market try to break above, come back for retracement, it is it, and then come back, it's try to break the first breakout, which is the fake out. So if we break this fake out, we are going to buy in a weekly time frame, right? But now what we can do is to scale down to daily time frame. I hope you guys are with me 100%. All right, so let's take a look at our daily time frame, because it's daily time frame we use to plot our minor level. All right, weekly is for major level, and then daily is for minor level. Remember this always. And then I use rotate rectangle for my minor level, something like this. Okay. Okay. You can see the market go back, retest and break, also retest. So that's why we can see a lot of rejection. We say if we get 1, 2, 3, 4 rejection or more, it's our minor level in daily time frame and major level in weekly time frame. So now let's clone the rotate rectangle and then use it in our next minor level. Who is this? All right, so I use this in my next minor level. Where is my next minor level? I have to touch all the touches. All right, so this is my 2 minor level, and then 1, 2, 3, 4 major level. So 4 major level and 2 minor level, this is what we get, right? So we need this in the future. We need this in the future. We need this in the future. So that's why I try to scale That's why I try to scale it, like to adjust. All right, so this is our minor level. All right, so this is our minor level, and then we can see like the market try to consolidate. Let me show you guys. Let me show you guys the clear chart. All right, you know, we can do this for just like us to get the whole direction of the market. That's why we can look at the previous while plotting the major or minor level. But once we get it, we don't need it, right? We just need to zoom in the current market price action, like the current region where you're going to place your trade. That's where you can look, right? So now this is our current market price action. We can see as we check on it, a downtrend and then an uptrend. We can see the rejection of the uptrend in daily time frame around here. The market is breaking. Like when the market retest this major level, it's try to break above, come back to retest the level, finally break all the way to the upside, right? I can see this like as my watch. I will use this as my take profit. Those rejections. I can also use it as my level, but it's closer to the major level. So that's why I want to use it. And then the rejection is not much. All right. So I will just use this as my take profit. And then this is daily time frame, right? This is daily time frame. So when the market break above, it come back for retracement and come back, break all the way to the upside to here. It come back to retest level, right? Break above, come back for retracement, and finally break the first breakout, and it goes up all the way to here. So because of this line, still the market continue coming down and is consolidating. Maybe we might expect this to be a Fibonacci retracement for this overall market price action. I hope you get this. Like I'm coming. So let me scale down to H4. That's where we can look for our potential entry of this market. This is where we can look at opportunity to trade. It's now that we can look at any opportunity that we see for trading around here. We can just do it. All right. So as you can see, like, so this is the last take profit for the overall uptrend that we can see the market start. So, but we do not break it, right? So now what I'm trying to show you guys here is like whenever the market come and test your major level, break above, you know that this is an uptrend. So you have to wait for the market to come back for retracement like this to retest the level and then come back to break this first breakout, which is your breakout. Let's try and draw this line. So this is our out. All right. So this is where the market reject and come down to retest the level. So it may be our fake out, and then if we break it, we can take a buy trade. So as you can see, this candlestick close above. So if we buy around here and then the market come back a little bit, then push all the way to the upside. As you can see, we can see a lot of take profits levels. Wow. All right. So then the market start pushing all the way to the upside. We take our first level target of profit around here, expecting the second level target of profit to come around here. So as you can see, the market come back a little bit for the retracement to the fake out where the market break the fake out, so it come back, and then the fake out, the consolidation area is very strong. That's why you see it's keep on consolidating, like rejecting the market. So we can see either the buyers or the sellers who are going to push the market uptrend or downtrend. So anyway, we are going to see this because we can see a consolidation, but the consolidation might be a Fibonacci for this, maybe, but I'm not sure. Let me show you guys. Let me try and draw my Fibonacci from swing low to swing high. I think it's going to be a Fibonacci retracement, but I'm not sure about this. So I'm coming. All right, so now, like as you can see, when the market come back, to expect this first Fibonacci retracement and try to go back all the way to the upside. So we may expect the market to respect this first Fibonacci retracement to continue pushing to the upside, or maybe it will come back and respect the second Fibonacci level before pushing all the way to the upside, or maybe we might come back to and retest the major level before going all the way to the upside. So anyway, but we are in, imagine like we are in profit. We take first level of target of profit and then expecting the second level target of profit around here, and then expecting the market to continue pushing all the way to the upside. All right, so this thing is very simple and straightforward. I always tell you guys, let me draw my trend line. Whenever you're trading inside your trend line, if it sell, continue selling. Don't ever buy if you do not break this trend line. This trend line is very, very strong, believe me. So whatever you're doing, buying or selling, you have to make sure you are inside of your trend line, not outside. If you break it, you are not going to continue doing that trend. You can look at what's the next trend. Like, as you can see, this is an downtrend and then uptrend and then consolidation, sideways ranging. You can see this is ranging, so we can call this downtrend or uptrend. This is the market is ranging, and then when the market is ranging, we have to wait and see like the next deciding zone. So now we're expecting the market to continue pushing to the upside or to come back and retest this Fibonacci level before continue pushing to the upside. So simple and straightforward. I always tell you guys to watch out this. It's very simple and straightforward. You just need to dedicate yourself by doing this. All right. So I think we have done with this, and then I hope you guys understand how you can analyze and trade the top-down analysis. It's very simple and straightforward. I will look for 1 or 2 or 3 pairs. Then I will close for today, I think. All right. Wow, you can see a lot of rocks on my Euro USD chart. Don't worry, right? Because I'm not deleting this chart. Like, I'm not deleting any single movement. I'm leaving everything for my back test, like to make sure I keep my track record. All right. So you can see a downtrend and uptrend, or you can see the market break the trend line below the trend line. So but if we say we can try and adjust this to share item, we can continue pushing to the upside. Yes, since we are above the major level, and then, but what will give us more confirmation on this movement is just for us to break this fake out. That's why you see my arrow is above it before I buy. So this is consolidation area. Like I explained this on Euro AUD USD, I think. you know, like all this thing is the same thing. I always tell you guys, stock, futures, commodities, crypto, whatever you trade it, you're gonna use the same strategy, right? So I tell you guys that this trend line is us that trying to buy. Why are we trying to buy? Because the market break above our major level, so we are buyers here, right? So, and then see our sellers, see the sellers, like this is where the sellers are, where the market break and then start coming to the downside. So, you know, like you can see a rejection, you can see a lot of rejection around here. So that's why you see when the market come here, it failed to break above, like because of this place. Like sellers are trying to push the market to the downside, and then we buyers are following the market with the trend line. Like we are following the trend line. We do not break below the trend line. We did not break below our major level, so we cannot sell this market, right? So we are trying to buy, but for us to buy, we have to break the sellers. We have to like break this fake out and then take the buy all the way to the upside. You can see my first level target of profit and then second level target of profit. So my last level target of profit will be around anywhere, but my stop loss will be at break even. So simple and straightforward. I tell you guys this. All right, so let me show you the one in Euro USD. All right, so as I tell you guys, the same thing happened on AUD USD too. You can see the market break above. That's our SL that it hit last. So the market come back to retest the manual level. You can see the body of the candlestick did not touch. It's just the shadow. But if you scale down to H1, the body also, because this H4 can, like, shadow of the H4 in shadow of the candlestick in H4 is a body of the candlestick in H1. I hope you understand this. So that's why we retested the level. So around the level, like that's where our trend line is, and then the market did not break below the level and the trend line, like because of this major level, and then our trend line is very, very strong. So that's what's kept the market buy strong. And then because of this, sellers are trying to push this market to the downside. You can see the market tried to break our trend line, but we can see we are still consolidating. We are still in the consolidating area, which is around here. So once the market confirm by breaking above this fake out, we are going to buy, or if we break below, we can set for sell. So simple and straightforward. I tell you guys, like it's not everyone that can show you this thing that I'm showing you guys. That's why I always want you guys to dedicate when listening to this, when watching my YouTube episode. Don't forget, hit the subscribe button. I say 1 or 2 or 3 pairs. I think it's okay like this because those pairs are quiet. All right, Amazon. I'm doing something on Amazon, like I'm making money on Amazon. I'm making money on Amazon. But today, Thursday, holiday in USA. So the market is not open up to now, but I expect the market to continue pushing to the upside, because we can see the break and retest and then the break. So we do not break the fake out. That's why we do not buy. We are waiting for the market to break the fake out and continue pushing to the upside. All right. So I think I'm going to stop here. I will see you guys in the episode 6 of the November Masterclass. Thank you.